Okay guys, so in this video we're going to talk a lot about Uber stock today. So I know I haven't posted a video about Uber in a while, but it is my largest holding and it is currently way up. It's right around the IPO price. So what I mean by IPO price, the initial public offering price, that's how much Uber stock traded at last year. So if we kind of go backwards and take a look at the 5-year chart, as you can see here, Uber went public back in May of 2019 at around $45 and around the $45 range, somewhere around there. And then now it is finally back. So it took almost a year and a half for the price to fully recover back to the IPO price. But I think the more important thing to realize is that Uber is a vastly different company from when it went IPO'd. And a lot of people don't buy IPO stocks, on a public offering. They feel like, because of all the institutions that are involved, everyone has to get a cut. And also you have, obviously, a lot of the founders are dumping some of the shares as well. So they feel like the stock is overpriced. But the good thing about Uber stock now is that it's a vastly different company. So what we're going to do about this video is we're going to kind of go into the latest Q3 2020 release and talk a lot more about the company and why it's my largest holding and why I plan to retire off of Uber stock. Before I get into this video, guys, please smash that thumbs up button. It really helps. Okay, so now we're kind of just moving back to the year-to-date charts for you guys, give you guys a quick rewind on what's going on. So now I want to show you guys a couple of articles to kind of keep you guys up to speed on what's been going on recently and why the price absolutely skyrocketed. So probably there's two real key catalysts right here. The most important one is obviously the Prop 22 in California, where it's giving Uber the right to basically have their drivers operate as independent contractors instead of full-time employee or fully paid employees. And of course the latest quarterly earnings. But I don't think the quarterly earnings is as important because obviously a lot of the rides business is still down from the pandemic. But the fact that Uber is still allowed to have drivers operate as independent contractors, that's going to help the company become profitable a lot sooner. So let's just talk a little bit more about that. Okay, so I'm on Q's Courts right now. It says Uber's market value just reached an all-time high. It's the CEO. And as you can see here, it says, first, on November 3rd, voters in California agreed to exempt gig companies from a new labor law that would upend Uber's business model. So, as you guys probably already know, whether you've ridden Uber yourself or you're an Uber shareholder, you realize that Uber relies on drivers. So there's a couple of reasons why this Prop 22 was so important to Uber's business model. As you can take a look here, here's Lyft, Uber, and the S&P 500. So yes, Uber stock has trailed behind the S&P this year, but I think it has super growth in the future. So as you can see here, also the company posted just over $1 billion in losses, which is narrowed than the losses from last quarter. So what I want to talk about now is Uber, the Prop 22. So as you can see here, it says a ballot initiative that will keep the app-based companies, economies, drivers, and delivery workers classified as independent contractors and not employees. Essentially, gig companies like Uber, Lyft, DoorDash, and Instacart want an exemption from having to start paying into benefits like workers' compensation and health insurance. Okay, so now I understand that there's two sides to this story, right? So obviously the drivers feel like they're not being taken care of, and there's lots of reports of like Uber drivers sleeping in their car and all types of crazy claims how the company is not being paid, how the drivers aren't being paid enough. And then we have Uber's side of it, and the shareholders and investors, we feel like that, it's not like you're working, an 8-hour shift at Walmart. When you drive at Uber, you have a choice when to work. If you want to work 1 hour, you can work 1 hour. If you want to work 10 hours, you can work 10 hours. So the flexibility and the freedom that it gives you driving for Uber makes it more difficult for Uber to want to pay you like a full-time employee. So I think a lot of people are bipartisan on this, right? Some drivers love the freedom, and a lot of drivers aren't driving Uber as their primary source of income. Maybe they're just doing it as a side hustle. So maybe they have a full-time job and then they drive Uber at night or on the weekends to supplement their income. But then there's some drivers where Uber is their job and they want to be treated like employees. So I read a lot about Prop 22. I'm not going to get into it too much here, guys. If you want to check it out, just Google it. Just Google Prop 22 Uber and you'll find out more about it. But basically, Uber is offering a lot of benefits for drivers if they drive more than 16 hours per week. So the Prop 22, I think that's one of the reasons why California voters accepted it is because all parties win. So Uber gets to keep their costs lower. If you drive a lot of hours per week, you get extra benefits. And also, by not having to pay all of these, health insurance and workers' compensation and unemployment, all things like that, that makes ride sharing cheaper. So obviously, if Uber has all these extra employees, they're going to have to raise the cost of driving. So basically, with this Prop 22, everyone wins. So now it's all about going into the future. So now let me tell you a little bit more about what I like about Uber's company in the future. To do that, we're going to have to dig into that Q3 report. Okay, so as you can see here, I'm on Uber's website. You guys should check this out at investor.uber.com. As you can see here, revenue was down, but we expected that, due to a lot of people not really using ride sharing. But I think the surprise in this report was the delivery numbers. So as you can see here, delivery gross bookings were up 135% year over year, while gross bookings overall were only down around 10%. So obviously we expected mobility bookings to be down around 50%. People simply aren't using rideshare as much. There seems to be a surge in car stocks, particularly electric car stocks and things like that. And a lot of people are still socially distancing and just kind of a little bit wary of, sharing transportation with strangers. But looking at the numbers here, it looks like that ride sharing is improving. And the nice thing is that mobility, obviously has doubled from Q2. So that means a lot of people are riding again. And, a lot of people don't want to own a car, and especially in big cities like that with parking so expensive, ride sharing, and obviously they don't want to get on public transportation with the whole pandemic situation. So Uber will bounce back. But the good thing is that, the delivery has surged. And I talked a lot about this. I think grocery delivery is the future. A lot of people, when they go to a grocery store, especially myself, I basically buy the same things over and over again. If I were able to basically order the foods that I want and have them hand delivered to me, I don't see the reason why I have to go to the grocery store, especially when I know exactly what I want. And some other interesting things that I'm going to talk more about: Uber Pass and Uber Eats membership. I'm going to show you guys some more numbers. So just to quickly go over everything to keep things, compact. As you can see here, monthly platform users is increasing, so now back up to 78 million. I believe that in the last quarter it was around 40 million or 50 million or something. So that's a big jump, and not near what it was last year, last quarter, Q3 2019, but still a good improvement. So what I want to talk about is, obviously, I want to talk about these numbers. So as you can see, the delivery business is absolutely booming. And this is one of the things that makes Uber different from the IPO. When Uber IPO'd, it was basically a ride-sharing company. So it's basically a taxi company. It was very one-dimensional. The majority of their money came from, rides. But now, due to the whole pandemic, the company has really transitioned. So now the freight business is doing well, the delivery business is booming, and the mobility business is slowly coming back. So basically, you're owning a company that's just dramatically different, and it's just crossed its IPO price. So like I said, I bought Uber during the IPO. I've never sold one share. I just basically bought the dip because I plan to hold this for the long run. My long-term price target is around $600. So I'm really excited about this company. But one of the things I really want to talk about, and I'm really excited about, that a lot of people are talking about, is how Uber is turning into kind of a recurring subscription business. So if I can just get to this part really quickly. Okay, so as we know, companies like Amazon has built a massively successful subscription business using Prime. So Uber looks like they're trying to do the same thing. As you can see here, they exceeded 1 million paid subscribers through the Uber Pass and Uber Eats subscribers during Q3. So now Uber Passes in US, Brazil, and Mexico, and Eats Passes in US, Taiwan, South Africa, Canada, Japan. So this is a huge milestone, guys. Companies like Netflix have been super successful on subscriptions, Costco subscriptions, Amazon subscriptions. Apple has a massive subscription business. So the fact that this company just passed 1 million subscribers, I think the future is super bright. It's really one of the things that a lot of the haters are not really mentioning when they talk about Uber stock. They're talking about the losses. We get it. The company just went public, last year. There's going to be losses. Anytime you're serving 78 million people and your business is growing, you're probably going to suffer losses. Few businesses are just profitable out of the gate. But the fact that now Uber has 1 million paid subscribers and that's growing, that's huge. And I think that's something that they really didn't have when this company went IPO. So basically you're getting the exact same company at the same price of the IPO, but there's all this extra baked in value, and we have a lot of growth down the road. I think people are definitely going to switch more to food delivery and grocery shopping. I don't expect those trends to change much, and I expect the ride sharing to rebound. So I just think things look really, really good for Uber stock. I still have my long-term price target of around $600, probably around 2025 or something like that. And I still plan to retire off my Uber stock. It's my largest holding, and for good reason. So what I would say, so now I want to kind of get a little bit more into where I think the price is going in the short term and what you can do if you haven't bought in yet. Okay, so taking a look at the chart here, as we can see here, Uber stock has been spiking on volume, and now it's basically at the IPO price. So what would I personally do? Well, I think that like I said, I've never sold a share of Uber stock, and Uber is one of those long-term holds for me. It's up there with those FANG stocks like Facebook and Amazon. It's one of those businesses that people really, it's hard to live without it. Me personally, I use Uber every week. It's just something that's part of my life. Just like if you're on social networking, you probably use Facebook. If you order things online, you probably use Amazon. And, if you, stream content or use electronics, you're probably using Apple or Netflix. If you're doing searches online, if you're using the internet, you're probably using Google. So obviously you can buy your own car and things like that. And there's a lot of people that don't use Uber. But the fact of the matter is that more and more people are going to be embracing the cost savings and the ease of using ride sharing and food delivery and things like that, just to save time and money. Getting into your car and using energy to go to the grocery store when you can just simply pay someone a small fee to bring the food to you. It not only it saves you time, but it saves you a lot of money, and it saves wear and tear on your vehicle. If you don't have a car, you don't have to carry these heavy groceries, lug them on the bus or lug them around the city. Very few people probably live really close to a decent grocery store. So that's also another problem for people in food deserts. A lot of Americans live in food deserts where maybe there's not a quality grocery store within a mile or so. So these apps like Uber, they really help the consumer get the best quality food and get around the city in an orderly manner. And especially now during the pandemic, where a lot of people don't really want to go out unless it's for reasons like work or exercise or food. These apps are just here to really save the day. Really, Uber's actually saving lives by basically delivering stuff to you and not allowing people to go out when it's unnecessary. So like I said, I'm investing in a company like Uber, and I think the things like self-driving cars and driverless pickup and all that stuff, that's well into the future. But right now I think the stock is a good fair value, and I have a very strong buy rating on it. So I hope you guys enjoyed this video. I hope I talked about a lot of reasons why Uber stock was soaring so high. Like I said, full disclosure, Uber is my largest position, and I'm planning on I've been buying Uber stock basically every week since it IPO'd, so I'll just probably continue doing that as well. So let me know if you guys enjoyed this video. Please, if you're new to the channel, smash that red subscribe button to receive more updates from me. I post videos on stocks like Uber and other tech stocks that I think are going to make you guys a lot of money. So that's it until next time, guys.